G'day guys. So the latest news on the commodities market is uranium, and uranium is soaring. So what the reason behind this is the Spot Physical Uranium Trust. That's $300 million at the market facility. So this basically allows investors to invest in physical uranium. So this is abbreviated the Sput. And so the Sput has been activated and it's acting like Pac-Man, and it's just gobbling up all the uranium off the spot market. Obviously, the nuclear utilities need to get their hands on this uranium to produce electricity. And, what's happening is the Sprott and the investors behind the Sprott are taking that uranium off the spot market and out of the hands of the nuclear facilities that obviously need to use that uranium. And that's driving the price up. And obviously, it's perhaps not even going to stop. If the Sprott keeps on buying more uranium off the spot market, it should further drive up the price. So we shouldn't even see the price collapse. What we see is that's all just green candles there. It's just rocketed up over the past few days without dropping down, and it's gone up from $30 to $40. Who knows where it will stop? Basically, as long as investors are putting more money into the Sput and the Sput's able to buy the uranium off the spot market. This spot market for uranium is obviously one of the most illiquid commodities markets out there, and that's why they're able to have such an impact. Now, what could get even more, how it could get even more outrageous is if the Sput is listed on the New York Stock Exchange, which is obligated to apply to do so. And if it does get onto the New York Stock Exchange, that's probably when we're going to see Wall Street bets, come into the picture here. Obviously, we saw GameStop earlier in the year, and just a tenth of the money that went into GameStop going into the uranium market could send the prices through the roof. We could see uranium at up to $400 per pound, and obviously the utilities and also even the contractually obligated, the suppliers of uranium that are obligated to fulfill contracts that need to buy off the spot market may also be forced to pay a higher price. And it's also good for the uranium producers. They've been unprofitable for years, except for Kazatomprom, of course. But with the high uranium price, they can restart their mines, which also they can set contracts at a higher price for the uranium, restart their mines, and obviously the utilities are going to need this uranium. We have a lot of reactors coming online in China. Japan's an interesting story because the politics there, whether they're going to go renewables, whether they're going to bring back nuclear. And obviously you got the US, which is extending the life of its reactors. It's bringing on a strategic reserve. And obviously the existing utilities haven't covered for all of their future supplies. So they haven't necessarily signed up long-term contracts with producers for that uranium. So there's quite an important need for uranium in the future. So there's both a supply side, a demand side driven push to the uranium price, as well as the GameStop style squeeze that could be taking place with the uranium. So what shares would we be interested in investing in? Obviously, the safest option would be Kazatomprom because they're ultra profitable and they have the capacity, and they're an existing producer. So that's probably obviously safest bet. Cameco is obviously doesn't seem to be as profitable as Kazatomprom, but they do have a lot of idle capacity, Scar Lake and McArthur River and that sort of thing. But I would be more interested in the ASX listed, being Australian. That's where I do a lot of trading, is on the ASX. So obviously Vela, that's an interesting one there, because so these are just an explorer at the moment, but what we can see is very high grade uranium floats, so large chunks of uranium rock in their tenement, which if they do go and drill this, I guess the hope is that, that it's going to be this high grade uranium with high lead, high silver, and rare earths. Hopefully they find all of this, given that they have found good indicators on the uranium rock chips that they've sampled so far. And if they do find really good uranium a really good uranium find, kind of like Cigar Lakes or even better, then obviously they're going to go through the roof, right? So that's just, I guess, wishful thinking. But if you're high risk, you could certainly consider Vel. And also they do have that really nice copper project in Peru, the Pica Copper project. Looking at those images, you can see there's copper there. The question is, if they drill it, how is it economic? Are they thick intercepts, or is this just something at the surface? But at least there's a great indicator there that we can see a lot of copper in those pictures, the mineralization. So you've got azurite and malachite. So that looks quite good. Although with the copper issue, you've got the Peru copper tax. So anyway, this might just be a trade, because obviously they're still years away from actually any sort of development. But the copper tax in Peru there could be an issue if Castillo manages to get this through Parliament. 70% copper tax, gee, that's pretty hectic. So I don't actually have much exposure to Peruvian copper mines. So I'd probably actually like it if they did a 70% tax, because that will severely discourage investment there. And I'd love to see the copper price go through the roof in the future, because I do have exposure to copper. So okay, what else do we have? Argonaut. So Argonaut is still affordable with only $20 million market cap. Now you've seen all the other ones: Paladin Energy, Peninsula Energy, Boss Energy, Alligator, AGE. So they've gone up, 100% already. They've already doubled. So, and a lot of them are trading above their feasibility study net present values, and they're still working on development. They haven't even opened their mine. So like Boss with Honeymoon, and probably even Peninsula, they're already they're already pricing in a higher uranium price than even $40 at present. But as we know, there's potential that it could go up to an all-time high, which would be above $140 US per pound. That's highly speculative, of course. We could see some producers like Cameco or Kazatomprom say, hey, we're going to provide all this uranium to these suppliers on contracts, and maybe the spot price goes nowhere. But Kazatomprom at the moment has said they're not even going to increase production for the next 1 or 2 years, and that's a great sign. And they said they're going to buy the uranium off the spot market to satisfy their existing contracts if they have to. So that's further bullish signs for uranium at the present. So where I was covering, the next one was Argonaut. So that's quite cheap. You might want to get in on them before they spin out Orpheus. So that's the uranium portfolio is going to be spun off into Orpheus Minerals. So obviously, as a shareholder of Argonaut, you might be entitled to some of those shares in Orpheus. If you read their presentation, they cover more about that with an entitlement or a in-species distribution. These guys have some pretty good uranium prospects, being close to the Ranger mine in the Northern Territory. Obviously, that produced over 200 million pounds of uranium in its lifetime and is now closed, which also, again, is a further bullish sign for the uranium industry, because, taking off some big mines, you've got a lot of big mines that are idled or depleted at the moment. So if they find something like Ranger, Argonaut's Orpheus Minerals could be quite valuable, especially coming from like these low market caps of $21 million. You're going to have, monumental price rises, like 100-fold, kind of like in that 2004 to 2007 bull run, where you saw some of these people make millions of dollars off, $10,000 worth of shares, and they ended up with, $40 million or something ridiculous in that time. Like they had big movers like Paladin Energy and that sort of thing. And also Argonaut has Honeymoon. Well, not Honeymoon, Boss Energy has Honeymoon, but they have a tenement near, they got a tenement near Honeymoon, so that's quite highly prospective. They've got the good geological setting on that one as well, by the looks of it. Obviously, Toro Energy, so they recently paid off all their debt, but they've got a higher market cap here, that $80 million, $85 million, and at 26 cents, they're nearing their 52-week high of 30 cents, I think it was. So, I hope I got those numbers right. I always mix up like the 30 cents and 3 cents, when when I'm not actually looking at it. So anyway, if they do break past the 30 or the 3 cent mark, they could continue to run if the uranium price does continue to increase, as we're hoping that the Sput can make it do, and the Wall Street bets sort of investors when they come on board. And Toro Energy does have the Wiluna, uranium project, which is still permitted. So the McGowan government continues to allow the Wiluna development, as far as I'm aware, because that already was permitted before the ban on uranium mining in WA. So it looks like they could develop that, although they're still early stages. I don't think they've even completed their scoping study yet, but they're planning to. And obviously, they've got a good prospect there with something like 80 million pounds. So, like, just take that by your uranium price target. Say if it's $100 per pound, then 80 million pounds is something like $8 billion, which is a lot more than their market cap of $85 million. So, whatever their net present value is going to be for the Wiluna uranium project, it could be a $1 billion project. Who knows? It's quite a shallow deposit, so it's a really good open pit, and they've got the vanadium co-product there, which is a really good point, because I always like co-products, especially if they're in their good economic recoverable quantities, because then obviously if the uranium price did go down, at least they've still got this co-product to support their economics. So they might be able to produce uranium at $30 per pound US as a cost. However, with their co-products, they might bring that down to say half, so $15 per pound, and still be economical to mine at today's prices. Gladiator Resources here. That's the interesting one, because that's a $15 million market cap, and they're acquiring a bunch of exploration portfolio for Tanzanian uranium prospects, close to some big ones like Uranium 1. So that's quite promising. We've seen a really big rally already in Gladiator, probably because they came off such a low market cap to start with. Just a week or two ago, they were much lower, something like $7 million market cap. And they've also got results pending for their Bendoc drilling. So, you've got some gold results coming out. Who's to say what they're going to be? We don't quite know. But their Rubber Glen project does look quite cool as well, because, that's paleo channel gold. And obviously, if you've been watching the Gold Rush Alaska and all that sort of thing, paleo channels are where it's at. They're always looking for these paleo channels to try and find their gold. So I like Gladiator's Chithan lead project or whatever it is in Rubbergon. And obviously Peninsula Energy, $200 million market cap. They've also already got some uranium that's sitting at a profit because they're holding it. So their plan was to secure supplies so they could supply their offtake contracts and that sort of thing, and secure offtake contracts while they bring on their low pH uranium project. And they have 60 million pounds of uranium, so that's quite a good resource, and they should be able to cover it quite cheaply with their low pH in situ recovery of that uranium. So there's a couple there to look at. However, like a lot of the other ones, like Boss Energy is already trading well above its MPV. You got Paladin, which is already quite a high market cap, and they're not making much profit at the moment. So they're going to count on a high uranium price to be profitable. So anyway, let's hope the uranium price does continue to keep increasing, and that will be very good.